Hey everyone, welcome back to the channel. Today, we're diving into a super popular investment tool that's been gaining a lot of attention lately, ETFs, or exchange-traded funds. If you're new to investing or you've heard about ETFs but aren't quite sure what they are, don't worry, by the end of this video, you'll have a clear understanding of what ETFs are and why they're such a hot topic right now. So, why are so many people flocking to ETFs? Even some of the most famous investors are using them. But what exactly is an ETF, and what makes it so attractive? Let's break it down and find out. First things first, an ETF is a type of investment fund that trades on the stock exchange. Just like stocks, think of it as a basket that holds a variety of different assets, like stocks, bonds, commodities, or even real estate. The goal of an ETF is to make it easy for investors to gain exposure to a diversified group of assets, without needing to pick individual stocks or bonds. What's great about ETFs is that they trade like stocks, meaning you can buy and sell them throughout the day during market hours. Unlike traditional mutual funds, which only allow you to trade at the end of the trading day, ETFs give you more flexibility. Plus, ETFs often have lower fees than actively managed funds, which is another reason they're so popular. And the best part, the contents of an ETF are highly transparent. You can always see exactly what assets the ETF holds. Now, how do ETFs work? Well, most ETFs are designed to track a specific index. Let's take the S&P 500 index as an example. If you want to invest in the top 500 companies in the US, you can buy an ETF that tracks the S&P 500. This ETF holds all 500 stocks that are part of the index. By doing this, you're able to invest in a broad range of companies without having to pick and choose individual stocks. For example, if you're interested in tech, you might choose an ETF that tracks the Nasdaq 100 index, which includes companies like Apple, Microsoft, and Google. By investing in this ETF, you're indirectly investing in a group of some of the biggest tech companies in the world, which allows you to benefit from the sector's growth while spreading out the risk. One of the biggest advantages of ETFs is their ability to give you instant diversification. For instance, you can buy a global stock market ETF, and that one ETF will hold stocks from all over the world, the US, Europe, Asia, and more. This helps you avoid the risks tied to investing in any one country or market. So, why are ETFs becoming so popular? First off, their low fees are a major selling point. When compared to traditional actively managed funds, ETFs tend to have much lower expense ratios. Many ETFs also follow a passive management strategy, meaning the fund manager isn't constantly buying and selling stocks, which keeps costs down. Another big reason people are flocking to ETFs is their flexibility. ETFs trade just like stocks, so you can buy or sell them whenever you want during market hours. With traditional mutual funds, you have to wait until the end of the trading day to make a transaction. But with ETFs, you have real-time trading, which makes it easy to react to market changes. A good example of this is the gold ETF. As gold prices fluctuate, many investors prefer to buy a gold ETF rather than owning physical gold. This way, they can gain exposure to the price movements of gold without the hassle of storing or selling actual gold. If you're thinking about getting into ETFs, you might be wondering, how do I start? Well, the first step is opening a brokerage account. It's just like buying stocks. You choose a trusted brokerage, open an account, deposit funds, and then you're ready to buy and sell ETFs. When selecting an ETF, think about your investment goals. Are you looking to invest in a specific industry, like technology or healthcare? Or maybe you want exposure to the entire global stock market. There are ETFs for almost every type of asset, from stocks to bonds to commodities, so you can pick one that aligns with your goals and risk tolerance. For example, if you're interested in renewable energy, you might look for an ETF that focuses on that sector. These ETFs often hold stocks of companies involved in solar power, electric vehicles, wind energy, and more. This way, you can invest in the future of energy, while spreading your risk across multiple companies. Now that you know more about ETFs, I'd love to hear from you. What types of ETFs are you most interested in? Or maybe you have some questions about how ETFs work, or how to invest in them. Drop your thoughts in the comments below. And if you found this video helpful, don't forget to hit the like button and subscribe to the channel. Ring the bell so you never miss an update on the latest investment tips and strategies. To wrap things up, today we've covered what ETFs are, how they work, and why more and more investors are choosing them. With low fees, easy access to global diversification, and the ability to trade anytime during market hours, ETFs are a great option for many types of investors. If you're thinking about starting your ETF investment journey, or if you have any other questions about investing, leave a comment below. Be sure to check out our other videos on investment strategies and tips to keep learning. Thanks for watching, and I'll see you in the next one.